Welcome to This Explainer. You know, if you've been sitting at your kitchen table lately, staring at your monthly budget, and just feeling this overwhelming sense of dread about housing costs, trust me, you are not alone. For decades, the traditional working family housing ladder was pretty simple. You rent, you save, you buy a starter home. It was the gold standard. But today, for the average working family, that ladder feels completely broken. So let's dive into the data and figure out exactly why.
So, why does keeping a roof over your head feel harder than ever? I want to validate something for you right up front. Your financial stress, it's likely not because of bad budgeting. It's not because you didn't skip your morning coffee or because of poor personal choices. There has been a massive, systemic shift in the housing market. It's a structural squeeze, and it's hitting working families from literally every conceivable angle.
The crucial point here is understanding what we call the housing trap. Now, this isn't just about high mortgage rates. It's a multi-stage crisis. Think back to the 2008 financial crash. The focus back then was mostly on risky mortgages and collapsing home values, right? Well, today's crisis is entirely different. It spans the entire life cycle of housing. Buying is too expensive, renting is too expensive, and crucially, keeping the home you already own has become significantly harder because of spiking insurance, taxes, and maintenance.
Section 1. The income gap. Here's the brutal math facing an average household today. The median household income sits right in the middle at about $86,000, but to comfortably afford the median rent, you need $76,000. That leaves virtually zero breathing room. And to actually buy a typical home, you need a staggering $111,000. So, as a working family, you might earn just enough to survive the rent, but you fall vastly short of ever being able to buy.
And this exposes the illusion of renting. Sure, renting might technically look cheaper on paper than taking out a massive mortgage, but rent is now consuming so much of a working family's monthly paycheck that it basically creates a barricade. High rents actively block you from building the savings you need for a down payment, paying off existing debt, or building any sort of long-term wealth. You are essentially paying a premium just to tread water.
Working families are caught in a literal vice grip. On one side, you have the renting dilemma. You face eviction risks, zero equity building, and constant annual rent hikes. On the flip side, if you try to escape renting, you slam right into the first-time buyer wall. We're talking about a median home price hitting $417,700, super high interest rates, and fierce competition from wealthy investors. The trap springs shut at both ends of the spectrum, and you're just caught right in the middle.
Section 2. The hidden costs of ownership. Now, what if you actually manage to buy a home? Well, getting the keys is really just the beginning. According to bank rate estimates for 2025, the average hidden cost of owning and maintaining a single-family home is $21,400 a year. Just think about that for a second. That is $21,400 out of your pocket every single year, completely separate from your base mortgage payment. The base loan is just no longer the full measure of affordability.
Think about where all that money goes after you've already paid the bank. You've got over $8,800 just in maintenance, basically praying the roof or the HVAC doesn't fail. Utilities eat up nearly $4,500. Property taxes take another $4,300, and home insurance adds nearly $2,300. And these aren't luxury upgrades, right? These are exact, unavoidable expenses that pile up relentlessly on top of a standard loan payment. They completely suffocate household budgets and turn a seemingly stable financial plan into a month-to-month survival game.
Section 3. The escrow and insurance shock. There's a really harsh reality pulling the rug out from under current homeowners right now. The mortgage may be fixed, but the cost of staying keeps moving. This completely shatters the great American myth of the safe fixed-rate mortgage. You know, you might sign a 30-year fixed loan, which gives you peace of mind that your principal and interest won't change, but your total monthly payment to the bank? Yeah, that is absolutely not fixed.
The National Association of Realtors tracks what's known as the escrow effect, and the numbers are honestly shocking. Combined monthly escrow costs, so that's the portion of your payment for taxes and insurance, have increased by 25%. We're seeing a 41% hike in homeowners insurance and a nearly 20% hike in property taxes. Just imagine opening your mail to see these hikes completely blindsiding your budget. Long-term homeowners and fixed-income seniors plan for one financial reality, but they're now being forced to live in another.
In fact, insurance is quickly becoming a second housing crisis right inside the first one. Climate-related risks mean families aren't just facing higher premiums, they're facing outright non-renewals, which forces them onto much more expensive secondary market plans. Deductibles are soaring. Insurance companies are increasingly forcing owners to do costly mandatory roof updates just to keep their coverage. And hey, if you live in a condo, your HOA fees are skyrocketing simply to cover the building's rising insurance costs.
Section 4. The pile-on effect and foreclosure risks.
So, what happens when flat wages collide with these skyrocketing, unavoidable costs? The trap closes. First, everyday living expenses stretch your budget thinner and thinner. Then, boom, you're hit with a sudden mandatory insurance and property tax spike through your escrow account. After that, life happens. A medical emergency or a broken water heater totally drains whatever cash you had left. Finally, you fall behind. It is rarely just one bad financial decision. It's the sheer suffocating weight of everything hitting you all at once.
And we're seeing the results of this immense pressure in real time. 118,727. According to Adam data, that's the number of U.S. properties with foreclosure filings in just the first quarter of 2026 alone. That's up 26% from the year before. Bank repossessions actually surged 45% year over year. This is concrete proof that systemic pressures, not individual failures, are actively causing working households to lose their grip on the American dream.
It's just a relentless cycle for the working class. Rent rises, prices rise, insurance and taxes rise, repairs rise, interest rates rise, debt rises. But wages? They just do not rise enough. The system keeps ruthlessly moving the goalposts for the 99% trying to build a little stability.
Section 5. Building real housing relief.
Now, if telling working families to simply budget better isn't going to fix a systemic trap, what will? We need targeted public policies that address the full cost of staying housed. That means massive investments in affordable construction to increase housing supply. It means robust first-time buyer assistance. Crucially, we need insurance reform to stop these extreme premium spikes, property tax protections to keep seniors in their homes, and anti-investor protections to make sure working families aren't just being outbid by Wall Street for basic shelter. To summarize the core thesis of our explainer today, the housing trap is not just a real estate market issue, it's a wealth issue. It's a labor issue, a debt issue, a racial equity issue, and a massive public policy issue for the 99%. Housing is the foundation of economic security. And when that foundation cracks under the weight of all these rising, unregulated costs, the broader economic struggle for power and wealth across the country just intensifies.
I'm going to leave you with this final thought. If the economy is supposedly growing, why are working families paying more just to stay in place? Really think about that. Housing is no longer just about finding shelter, it's a battle to keep the wealth you build. Thank you so much for joining me for this explainer, and remember to keep asking the hard questions.